The Federal Reserve created the Bank Term Funding Program several years ago, which allowed banks to sell those treasuries to the Federal Reserve for exactly what they had paid for them, not their market value, as long as those banks committed to purchasing those securities back. U.S. banks today are still limited in how many U.S. treasuries they're allowed to purchase. And that is a big issue, not for the banks, but for the U.S. government. Interest rates on government debt have been climbing. At the same time, Washington is cutting taxes, increasing spending, and piling on more debt every single year. But here's the kicker. While the government's appetite for borrowing is definitely going up, the number of people and institutions, both domestic and foreign, willing to lend money to them is actually decreasing. So with fewer buyers and a government that needs to borrow more, what happens? Interest rates rise. With all of that being said, it means that the U.S. government doesn't have many options but to repeal some of these bank regulations, because the risk that they're facing now might actually be even worse than the collapse of the entire banking system. If the government defaults, that's effectively the end of the game for the global economy and for the U.S. economy too.